Hey everyone, I'm Joey. Today we are going to be talking about dividends and what the heck they are. I've been watching a lot of Andre Jick's YouTube channel, and I've been learning that his plan for retirement is investing into dividends using the Robinhood app. I had to do some research on my own to figure out if dividends were something that I wanted to invest in. Now, I don't know Andre personally, but I'm hoping that after my YouTube channel gets monetized to make a few videos with the guy. He's got some great videos and some great information on dividends. Not to mention that he's super entertaining with his magic tricks that he throws in each video. Which makes me wonder, would my videos get more views if I threw something entertaining like a backflip into each video? I don't know, but we're gonna find out. Or what if I included the sea turtle that I saw the other day? If you liked either or both of those things, do me a favor and like this video and subscribe to my channel. It helps me out and it helps other new investors find this information. Also, comment below to let me know what you enjoy about my videos so I can be sure to include more of that content. Andre Jick is a YouTuber and a dividend investor living in Las Vegas. I've been inspired by him and fellow YouTuber Graham Stephan, who's a real estate investor living in Los Angeles. Andre has found great investment opportunity in dividends. Graham has found great investment opportunity in real estate. And I've found great investment opportunity starting my own businesses. I'm for sure not on these guys' level yet, but I'm working to get to their ranks as a small business investor living in Hawaii. After starting my first company, I realized the importance of passive income and diversifying my income and investments. I started my first company, Joey's Bloom Company, in 2016. I started investing in stocks in 2018, and I bought my first property in real estate in 2020. Apart from these income sources, I'm also working towards other income-generating businesses like a tour business here in Hawaii, a finance YouTube channel, a finance blog, a vacation rental / Airbnb, and also expanding those first three sources of income. I'm almost always looking for passive income opportunities, so after coming across Andre's videos on dividends, I had to research them more myself, and here's what I found. First, I opened up an investment account using the Robinhood app using a referral link, which gave me a free stock. The free stock I received was a dividend stock worth about $4, and I recently got a dividend payout of 81 cents. It doesn't seem like much because it's not, but it's still free money that I got just for opening a free investment account. If you're interested in getting a free stock, check out the link in the description below to the Robinhood app and we'll both get a free stock. You can also help your friends get free stocks by using your referral code, and you can earn more free stocks that way. So what's up with dividends? Purchasing dividend-paying stocks is investing your money with companies who pay you, the investor, just for holding your money with them. These dividend payouts are generally not more than 3% of your investment and are paid out on a monthly, quarterly, or sometimes annual basis. If you've seen any of my other videos regarding inflation, 3% return on investment, or ROI, is a red flag for me, and we'll get to that in just a second. A benefit of investing into dividend-paying stocks is that it can create a good passive income source. If I invest $1,000 into Coca-Cola, Pepsi, Verizon, AT&T, or another dividend-paying company, every 3 months that company will pay me $30, or up to 3% of my investment. Actual dividend payouts vary from company to company. So I can take that $30 and deposit it into my bank account. Boom, passive income. Or I can reinvest that $30 with that same company and make my next dividend payout a little bit higher. In addition to the dividend payout, my investment with that company can also grow if that stock price increases. So if I invest $1,000 into XYZ dividend paying company and their stock price increases by 2%, giving us a grand total of a 5% payout up to 3% for the dividend and an additional 2% for the stock value increase. There's no question that this is a form of passive income and can be very lucrative. However, there's definitely an alternative perspective. While this is seemingly a great way to make passive income, consider this. Saving your money in a savings account will yield you about a 1% gain of your investment annually. That means if you put $100 into a savings account, you will earn $1 after a year because that's 1% of your investment. Your savings account balance is now $101. Whoa, what a deal! Nah. The inflation rate is about 2 to 3% annually. This means a $100 item this year will cost $102 to $103 1 year from now. If you've ever heard your grandparents say, "I used to be able to buy a hamburger for a nickel," the reason hamburger prices have gone up is because of inflation. Saving your money in a savings account helps you not spend money because it's called a savings account, but you're actually losing money because you're earning 1% when the goods and services around you are increasing by 2 to 3% every single year. So I had to make that clear before jumping into my conclusion about dividends. So here are my thoughts on investing in dividends. When I invest into anything, I look for more than a 3% ROI, or return on investment, because 3% is the inflation rate, and if I don't make 3%, then I'm gonna be losing money. Most dividend paying companies are massive companies that aren't necessarily growing anymore, and in some cases are actually declining. So why is this common for large companies that aren't growing anymore to offer dividends? We'll get into that in just a minute. If I'm going to invest in a dividend-paying company, I'm going to make sure that their stock price is increasing over the long run. If I invest into a company whose stock price has been decreasing for the past 5 to 10 years, I'm going to be losing money because even with a 3% dividend, my investment will not be keeping up with inflation. So I can automatically cross off on my list the companies that are no longer growing because I'm not going to invest my money with them. So why is it common for dividend-paying stocks to be large companies that aren't growing very fast? Why do these companies pay out dividends and other companies don't? Here's what FinancialSamurai.com has to say about that. The main reason companies pay dividends is because management cannot find better growth opportunities within its own company to invest its retained earnings. Therefore, management returns excess earnings to shareholders in the form of dividends or share buybacks. If a company pays a dividend equivalent to a 3% yield, management is essentially telling investors that they can't find better investments within the company that will return greater than 3%. So for dividend-paying companies, instead of investing that 3% gain back into their company, they just pay it out to shareholders. Some investors look at it as sort of a thank you for investing your money with us from the company. With such a generous offer, shareholders are willing to reinvest their dividend back into that company. This makes the investors think that they're making passive income and the company continues to hold their investment. In regards to companies that are still growing, it's way more likely for me to invest into companies that are continually growing over a 5 to 10 year period, but even so, I would still rather invest into a tech company stock or an index fund that's growing at 8 to 12%. The downside of that is my investment is not liquid cash. That means it's stuck in the stock market while it grows and I don't have access to it. Dividends provide passive income that can actually be cashed out and put into your bank account on a regular basis. I'm young and I'm not looking to retire soon, so I'm willing to make a little bit riskier investments. I have my whole life ahead of me to make bad investments and learn from them. I'm a long-term kind of investor and I like to take educated, well-researched risks. I'd rather invest into high-risk, high-reward stocks now rather than right before I'm about to retire. At that point later in my life, I'll want to make very low-risk investments that create small, steady income streams. But for me right now, as a young investor and entrepreneur, I've got time on my side and other income streams, so I'm not going to invest into dividend stocks until a little bit later in life. Hopefully this was helpful to you in figuring out how dividends work and a little of my thought process and why I'm going to wait until a little bit later on in life to invest in dividend stocks. Remember, my decision doesn't mean that you should make the same decision. Do your own research, just like you're doing. I'm not a financial advisor or an extremely experienced investor. I'm just a kid in his 20s on YouTube talking about my thoughts and opinions and what makes sense for me. If you got anything useful from this video, don't forget to hit the like button. Also, subscribe to my channel for some more finance, investing, small business, and Hawaii adventure content. If you're interested in up-to-date information on which stocks or mutual funds that I'm investing in, what new businesses I'm starting, and how my real estate investments are going, feel free to check out my Patreon for up-to-date information. Thanks for watching, everyone. I'm Joey. Look forward to talking to you soon.